What's up, traders, and welcome to my second back trading session. Within this session, I'm just going to be going over Tesla and simply going to be going over the 3-minute price action from Monday to Friday. So I'll just be covering just basically when I would ideally look to buy a stock and sell. Just basically how I'm going to navigate the trade, or at least how I should have navigated the trade from last week's price action. If you have seen my P&L from last week, I believe let's have a look actually. It's in the Discord. Let me just get up real quick. So this was my P&L from last week. I traded on the Monday, Tuesday, did not trade on the Wednesday and Thursday as there was FOMC. And then Friday, obviously we took our red day. We're going to see what we can do on the Friday, and we're going to see if we should or could have traded on the FOMC days. So, let's get into this. First things first, obviously always go onto the daily chart and map some supports and resistances. Best way to do this is using EMAs. Obviously beforehand. Just go back to the Monday. Now, instead of mapping the daily EMAs, I'm just going to map the weekly because I know for a fact that they won't move as much. So, just going to do a few lines. So, for instance, that one there. Then we'll slap on our other ones. I mean, there's quite a few on this chart. You don't obviously need this many, but it's just nice to see that they are around. I like to use them as profit targets as they are. Usually resistance levels, etc. Obviously do the monthly ones as well. We'll do these in a green because they are quite key. One down there as well. So, next thing I like to do when I back trade, obviously take off the indicators because you don't need them anymore. But yeah, next thing I like to do is obviously just look at the chart. What am I seeing right now? So, obviously we saw support being held, down here. Buyers obviously stepped up. Now it looks like we're just consolidating this 4-day range. We are either looking for a breakout above this 186, is this level over here, or break down at least below this this previous pivot around 175, let's call it. So let's go on the 3-minute. This is the current price action on Monday morning. We are just about to open. Obviously, we are inside trading of the previous day's range, so we're not going to be trading until we break this point down here, which is 177.35. So just to make it nice and clear, let's put a nice little red line here. So no trades until that breaks. Alright, well that's quick. It's already broken, let's delete that. Let me just pour up my coffee quickly, guys. Get a nice little focus going. I know that this is currently like a recorded session, but if you guys want me to do it live, I can always do it live for you. Because we can always go over the charts, together. Like maybe you could tell me what ideally the next move should be, if you should buy or not buy, etc. I'm pretty sure you'll learn better that way. But just a thought. Leave a comment in the in the comments below if you would like to join one of the live recording sessions. So anyways, let's go back to Tesla. We've just wicked out below the bottom of the day, so any long traders might have a stop loss if they're super dumb enough to have it that tight. I personally wouldn't have it that tight. It'd probably be like down here somewhere, but hey ho. Volume is super shallow as well. 30k volume, not significant at all. Alright, there we go. So let's just see what it does here. Obviously I'm going to be looking for a setup. We've got our custom indicator on as well. So basically, just before I start going into it, a red candle means that I want to be shorting under it. So for instance, we just got a red candle here. That's going to be the ideal setup, shorting underneath of it with a limit sell, sorry. Green candle means that we're going to be longing above it. We do not want to be market buying. We want to be going, we want to entry above it because we're basically playing the momentum. We're playing the breakout basically. So that right there, my friends, is a short position. So I could have done this, right? Bish bash bosh. Obviously that key 175 level is just there as well. So, you know, we are looking for the breakdown. We'll leave it there for now. As, you know, we could get set up, who knows? We might get filled, we might not, who knows? I'll still leave it here. That is another, that should be a small red body, but it's not, don't worry. Okay, we're just gonna leave that. Oh yeah, it's not green candle, don't worry. Right, next candle comes in, bullish candle, we are still holding on this, kind of like a double bottom here on the 3-minute chart. Still no fill. Alright, now we're gonna cancel this one. So it looks like we're gonna be going long. It also looks like above this 180 we've got room to 186. So we are looking at that. There is quite a bit of volume in this area as well, just here. You know, so if we break above that, then that'd be nice. Still watching here. For a setup, we do want a setup. Come on. I mean, I could have entered on the doji candle. It's tiny green, but yeah, I'd rather see like a spinning top or something. Alright, and that is our first setup right there. In my opinion, super extended, but we're going to stick it and play by the strategy. So that'll be our long position with risk 50k, with risk only 0.15% on this one. Because, you know, it's not an A+ setup. I'm not going to, you know, go ballsy and try and, you know, hit a home run on the first trade. Like, why would anyone want to do that? Obviously, target 1.2R. We're going to see if we can get filled. It would be a breakout trade, but we're just going to see, right? Make it nice and big for you guys. Okay, another green candle means we can average down a little bit on our limit buy. Remember, we're still not in this trade yet. Still waiting to get filled. Next candle, we are filled. We're filled at 10:12 on a Monday morning. 1 second, guys. I'm just typing into my Excel sheet right now. I'll be a couple of seconds. Just got to type in my proposed exit. My risk is 0.15. There we go. So let's. Oh, I did not mean to do that, guys. My bad. My bad. So we've just been filled in the trade. Volume increasing, hit new higher day. If 1844 breaks, we are going to be moving our stop loss up a little bit. Another consolidation candle. Now, this one's an interesting one. Ignore the fact that it's green. This is actually a bearish candle. Just have a look at the volume as well, guys. It is increasing volume on a bearish indecision candle. So basically, what I see by this, I mean, what I actually see when I look at these candles is that if we break over the top of it, then we are more likely to go long, because that means, you know, there's a lot of shorts in this candle, maybe betting it for more downside considering the volume's quite high. So if we break above, we are obviously, you know, trapping some shorts, basically. Simple as it is. Another instant candle. Loving the consolidation right now, guys. It is really nice. Then we've got a breakup candle. Also, look at the volume on that breakup candle, guys. That is very, very juicy volume. That is what you want to be seeing. I'll tell you that. Quick sip of coffee. So yeah, that's really nice. In this case, I'll then move my stop loss up. So let's do a stop loss line here. So I've now put my stop loss I'll probably move it halfway to lose 0.5 R instead of a full 1 R. And for you guys, if you're unclear what a full R is, basically this section right here, right now, is 1 R. So this bit equates to 1 R, right? Obviously, if I'm going to move my stop loss here, let's make this back. Yeah, if I put my stop loss here, it's basically, you know, halfway between this and this bit. So, you know, easy as it says, I'm losing 0.5 R, which is, you know, dramatically decreasing my risk on the trade. That is the one thing you want to be doing on every trade, decreasing your risk as much as possible. Now, the reason why I'm not placing it, say, for example, like here, is just in case if the trade does actually come back down and then go up again, because you just don't know what the stock's going to do. Yeah, I'd much rather lose 0.5R than be stopped out and then for the trade to just actually reverse and keep going its own way. I've had that done to me many times, and it is so annoying. It's like even if I put my stop loss, above my average, like, don't get me wrong, it could work, but you just don't know if it will work. Right, so let's have a look at this trade. Let's keep it going. Let's get through this a little bit more quickly here. Okay, really nice volume on the bull side. Obviously, buyers are stepping up here. Maybe shorts getting squeezed out. I don't care. I know that I'm making money right now. I'm making profit. Do not mind if I do. I'd likely move my stop loss up because we are now testing this 186 level. So I'll probably put my stop loss to break even. I can't lie. Probably somewhere down here, just to be a little bit more safe. But yeah, a lot of traders as well may use the VWAP. Obviously, VWAP's quite, it's all down here, so it's not really subjective in this scenario. But a lot of traders do use VWAP as a stop loss level. Or the 10 EMA, it works as well. So for example, if the 10 EMA breaks, which is the blue line, I would likely get out of this trade. But anyways, we're going to stick at it where we're keen. We want this 1.2R trade, and we are certain we're going to get it. Okay, pulling back, very light volume as well. Let me just clarify this for you guys. Look, volume decreasing, that is what you want to see. Obviously, if you're new to volume price analysis, decreasing volume on a pullback is obviously very, very bullish, because that means sellers are not selling, they're not forcefully selling the stock or shorting the stock. Buyers are wearing out. It's like testing the supply or demand sort of scenario. Alright, let's carry this on. Let's go a bit more quickly here. Bit of consolidation. I love it. Can't go wrong. Look how tight this consolidation is, though, guys. Like, it's literally, $1.50 consolidation tight. Okay, we're dropping back a little bit. Obviously, we do not want to take out this big bull candle here. If we do, that's super bearish. My stop loss will still be in the same place. If we get above the 10 EMA, I will likely move my stop loss below this pivot, but we're still watching here. Alright, so it does look like we're going to get stopped out. And there's the stop. We would have got stopped out right there. So, I mean, what? That's like a solid 0.7R trade. Wow. Okay. But the good news is that I am green. Only by a little, don't get me wrong, but, I manage my risk, and I'm green. That's all that counts. That's all that matters. That's first trade on Monday. We are still looking to trade some more. So, let's carry this boat on, if that's even a saying. Okay, so keep in mind this was the recent consolidation stage, so ideally we do not want to be going below this pinkish line. We have taken out this big bear candle. We should see buyers step up here as well. Let's take that off. Let's follow the 10 EMA strategy. Let's have a look where price is going. I mean, I'm more bullish on this trade than bearish, so I'm still looking for a bullish setup. I mean, you could have shorted here. Don't get me wrong, like you could have put, a short entry here, stop loss up here, target, whatever, would have been hit perfectly. But I'm focusing on being bullish because, quite frankly, the double bottom, I mean, yeah, that's basically it. So still watching, got some gaps here. Okay, that's our first setup. That is our long setup right here, guys. Stop loss, let's place it down here. Now we can even increase our RR dramatically here, because obviously we're going to be going for the higher day. And I might even hold this one overnight. If we get filled, obviously. Okay, it's looking good. Okay, so we've got filled again here. Long at 112. 112. Filled long. We're filled at 182.54. And we are looking to exit around 186. Again, risking 0.15R on this trade as it is a Monday. You know, I don't want to start the week with a massive loss if this does go against me. I mean, so yeah. Let's keep it up. Let's keep it going. Let's keep it rolling. Okay, it's looking good. Bit more consolidation. Looking for a break above. Come on, here we go. All right, stop loss would probably go around here now, guys. Now, next level to break is obviously 18444. If we break that, stop loss probably around here at about 182-ish. So let's just see how it goes here. Market closes very soon as well. We are back trading, and I didn't hold this one overnight in real time, but I am going to, as I mean, I don't know really. It does look good. It looks bullish. I mean, don't get me wrong. Some traders might see this as being a head and shoulders pattern. You know, you can quite easily see this. So we might see a gap down. That is obviously a scenario. But in this case, if you just look at a simple price action, you see obviously higher high, higher low, higher high, higher low. Do we break down this previous point? No, we don't. So technically, that level right here is still a higher low, which makes this a higher high, as we did break above yesterday's high. So technically, this is a pullback. Yeah? So, I don't know, if you guys understand this, there's more chance of it gapping up and actually breaking this high. Well, not necessarily gapping up. There's just more chance of it gapping, or not even gapping actually. There's more chance of it breaking this high above here than it breaking this low, because we are still in that pattern. If this high didn't break on that day, then obviously, let me just make it a little more clear. Sorry guys, I'm probably just waffling. But what I mean is, if we didn't actually break the high here, we'll still be in a, I mean, you could say a downtrend, because that would be, you know, say for example we just hit this bit here, that would just technically be a lower high, and then this is the lower low, lower high, you know, for example. It's always good to count the trend, in my opinion. Always good. But yeah, let's stop the waffle and get back to the trade. I'm just going to Excel again, type in held overnight to this trade. Okay, so. Okay, we're gapping up. I've got no idea why. I do not know the news is what it is. Skip this a little bit. Let's go back to open, and that's our first candle open. Obviously, we'll just smash the target. On my broker, I am not allowed to buy or sell until 5 minutes into open. So we're gonna count this as a 5-minute candle right here, and our exit would have been at 189.40, which would have been a killer of a trade. Literally killer of a fucking trade. 189.40. So from that 0.15R risk, I had the potential to make $274. 277.44. And yeah, I mean, don't get me wrong, not a bad trade. 3.66R. And that's only on 0.15% of my account. The reason why I'm risking so low is because I just don't like the market right now. I mean, I am confident in trading, but I just don't feel like it's the market to size up. Not yet. Not with all the banking stuff. Just not a bit of me. Not a bit of me. Like, I do really want to start pressing onto 0.5% of my account risk, which would have led to a decent gain of $900 in one day, which is fucking crazy. But yeah. Anyways, let's get back to this trade. Now, we are gapping up, so that means we can literally go long on the first setup we see. This is a bearish candle, which means we can long. Obviously limit buy above it. So a bit like this. Stop loss, I mean, I'll probably end up putting it here. And target, I always go on the 15-minute or greater. And let's look at the volume nodes really from previous ranges. I mean, you could say that's quite a big one. It's 190 level. Next big one's around 194, so it looks like I can press for 194.75 on this, making this a really, really nice trade if it does follow through. Alright, what the fuck is that? Anyways, let's make this smaller. Sorry guys, 1 second. Alright, back to the trade. Let's see if we can get filled here. Next candle comes in, another bearish candle. It means we can limit our buy order a little bit further down, increasing the risk to reward dramatically. That's the good thing about this strategy, is that if you don't get filled, you can average down more, stop loss exact same, and you can increase your size by a bit more, which obviously makes you know, the money grow if you do get out at the level you wanted to get out at. So yeah, let's get back to the trade, see if we get filled. Okay, we're filled here on this one at 9.39, quite an early fill. Only 9 minutes into the session and we're filled on our first trade. So it is the Tuesday session, I believe. Yes. Tuesday session, we are filled long. We're filled at 189.58. If you're wondering what I'm doing right now, I'm just filling out an Excel sheet. I will display it at the end, so you guys can all see the good stuff. I still need to write some code for it, so I know, you know, what days I should be trading on, if I'm better at going long or short, what, you know, kind of the ratio between my risk sizes, like what level of risk I work best at, and all that good stuff. You know, like, even if I'm holding overnight, like, what is my average win rate of holding stocks overnight as well? Alright. Next candle comes in. Super bullish candle. Cannot get more bullish than that. That is beautiful. We're just going to skip through this because, quite frankly, it just looks so tasty. Alright, so we're pressing higher. We're going to move our stop loss. We're going to move it just here. So just above break even. Free risk trade. Do you know what I mean? Takes off all the aggro on his shoulders. Oh, hang on. Should I have done that? I haven't been stopped out yet, but now I'm questioning myself. Should I have done that? So actually, I'm going to move my stop loss below. So I would be taking a loss here if this does go against me. But considering how close we are to that candle, I do not like that. I do not want to get wicked out. That is not the plan. And I would have been wicked out right there. So we're still watching this trade, still in it. It's looking tasty. Don't get me wrong, another thing I could have done here was get filled again, because obviously we're trading in the same direction. What is the point of not entering another position? So, you know, I would have done this. Stop loss just below this recent low. Target, same as this one. So we're going to count this as a trade. Just pretend that I got into it. So we got in at 11.00, we are long again, and we got in at 191.72. Proposed exit is the exact same as the other trade. So technically we are now, well, it's not technically, we are now risking 0.3% on this trade, as we've got two trades open, and we're risking the same amount for each trade. So we're going to skip this up a little bit. Obviously stop loss. I mean, what I like to do if the higher day breaks, I will move my stop loss, not that one. I will move the stop loss for both trades to a point where I'm comfortable. So for example, I would have done it here, making this one a risk-free trade and this one only like a 0.5R loss. But if you look at that, guys, we would have just exited all our shares and gained. Let's have a look how much we gained. So let's update this quickly. Exited both our shares at the same price. On this trade, we would have made 2.78R, which is insane, 2.78R. And on this one here, we would have made 1.42R. 1.42. So on this trade, we would have made 208.47. 208.47. And on the other one, we made 106.54. 106.54. 106.54. and that is a Tuesday. So these are the 2 days I would have traded, or I did trade anyways. And so far, I would have made, you know, a lot more than I did. And that is literally just a gem of back trading, because it just tells you that you could have traded these setups, but you just didn't see them in real time. Yeah, I don't know. It's just really helpful. If you're not doing it, guys, please, for the love of God, for the love of Jesus Christ, you got to start doing it. It's just very helpful. And I promise you, it will change your trading. It really will. It changed mine. It's changed countless of others. It is just so good to trade, to back trade. I'm not just talking about my strategy, but if you've got your own specific strategy, just back trade your own one. It really, really does help. Like, I'm not, you know, like, that's just not like something a dick would say. Like, it really is helpful. But quite frankly, I would have made my monies here on this trade. So, I mean, still looking for a setup to go long, don't get me wrong. Okay, still watching here. That is a setup. Excuse me, guys. So, I mean, this would have worked. Looking at the volume as well. Let's put this one down here. 1.2R. See if we can get filled on this one. This is a bit cheeky of me, but we'll see. Okay, more candles here. I'll still keep it in the same place. Not filled yet. Okay, we're filled for our third trade of the day. So that is going to be breaching my my rule. Not breaching. I mean, I have a max trade of 3 trades per day, so we're at our limit for the trades per day. We're filled at 194.38. And we're going to go in for 197.20-ish. Now, on this trade, I would probably decrease my risk dramatically. Probably go for a 0.05% trade, as I did just take 2 winning trades. You know, I don't want to be blowing away gains. I'm just going to be like, I don't know, trading this because it's my strategy, and I can trade it if I wanted to, so still watching. Looking for high day break. If high day breaks, then we're obviously going to be going, moving our stop loss up a little bit, I mean. There's high day break. Stop loss now here. Easy as that. Let's speed this up a little bit. I do not want to be holding this one overnight, to be honest with you guys. I'll probably put my stop loss, you know, above my average now. And look, we would have hit. Gosh, just like that. 197.20 would have made $30. $30. Would have made 1.2R on this trade, 1.2, and risking 0.05. Not percent R. So yeah, would have been a really good day if I did take all these trades. Now we're going to skip along to the next day. Just had a massive trending day. FOMC is on the Wednesday, so you know, we'll see how this price action is. I do remember this price action because I was watching it literally all day, and I didn't trade until FOMC. So I doubt I'll trade him back. I doubt I'll even place trading back trading as well. I mean, just look at it. I just hate it already. I just feel like, oof. No, actually, I'm gonna stick to my rules. What I would use in present times, and that is not to trade on FOMC days. So we're gonna completely skip Wednesday. Keep this going. Keep this going. Keep this going. All the way to 4. Then here comes the chop. Alright, after hours hits. Now, one thing I do want to note, I know for a fact we gap up, but we're still within the range. So if we just go to that area again, not again, but if we just go to that area, so we gap up in pre-market, here we go, pushing higher, Now, obviously we are still trading with an inside day of yesterday's range. So it already is a fat, like, no trade for me. But I do want to say something here, guys, because if we do break above this level right here, that means all these shorts who have got in, you know, into FOMC, this area, and then underwater, you know, they're going to be forced to cover, forced to sell the stock, which obviously drives the stock price up. So, key level to watch for. Let's make note of it. So, it's technically an area. Like, if we can break this area, then you know it's quite key. Let's do this. Say it's just here. You can tell by the volume as well. Okay, there we go. We're literally above it, right? That is an instant long. Would have been like this. Bosh. Probably stop loss not even that far actually. Probably just like down here somewhere. Target. Obviously go back to the 15-minute. Check the volume nodes from previous price action. It looks like we can stretch it to 1.9R. To be safe, we'll probably just go for 1.4R, as it is the day after FOMC. But yeah, this would be the trade. We are gonna take it. So we're filled on a Thursday at 9:42. 9:09.42 on a Thursday. Okay, another candle comes in. Still holding this support area. Bit of consolidation. Buyers are keeping price above. Looking good. Okay, breaking out here. Let's update our stop loss. Stop loss now be here. Coming back down again. Testing. Waiting for the breakout. Are we going to get stopped out? Okay. First loss of the week on a Thursday. Would have been right there. Can't lie. Stop loss is a little bit tight. I probably should have done it here. But for the sake of the trade, we're going to keep that one as that. So, would have lost on this one. Entry would have been 198. And we would have got stopped out at 196.65. So, I'm going to say it's technically 0.5R. So, we're just going to change this again. Risking that. So yeah, basically would have lost, what, like 37.50. Turn it to red. Alright, so we're still looking for a setup, guys. Let's delete this one quickly. So, day after FOMC, super choppy. Like I said, I didn't trade it because we are still in yesterday's range. I'm actually quite glad I didn't, because, you know, would have been chopped around. And price action is still just terrible, to be honest. Like, what is that? What is that move? It's just mass sellers. Again, focusing on this level. Just take this away. Okay, Friday. I did take a losing trade on this day. We are watching for this price to break down here, because then we can actually trade the day. So watching. Coming up to open now. Okay, there's open. Hit lower day. Okay, we're watching for price action to do its thing. Obviously, that could have been a short position here. I think I did go short on this one, to be honest. Stop loss above here. Target 1.2R all the way down here, which, I mean, yeah, I would have made it. I would have hit the trade again. It's a really good setup. What I'm seeing here, guys, is that, you know, we've got some consolidation here. Breaking below all the support. Everyone who bought up here is now under the water. They're looking to sell their shares short. So yeah, I mean, the setup's good. Don't get me wrong. Looks like a nice trade. I would definitely take it. Pulling back. And then winners reversing, which was weird. Now, you know, in this stage of the day, I would probably be a bit confused. I'd probably be like, right, so let's go long. You know, I might have even got filled here long. But, I mean, it's just one of them things, because it's just chop. There's just not much you can do. The best thing to do in this scenario would be to obviously hedge a position. The best thing, which I usually probably would do, was take out the fibs, go from the low to the high of the recent swing at open, and then literally place a long position and a short position at the exact same price. Same amount of shares, same risk, whatever, but obviously, so let's take this away quickly to explain to you guys. This is just how I hedge trades. So, this one's my short position, obviously. Target is down here somewhere, whatever. Stop loss above higher day, and my long position would be stop loss lower day, and target, you know, 1.2R. So, technically, we're only going to be making, like 0.2R if we do, get stopped out on our short. But if the trade does follow through on our short, we could be making a 4-1R, which is, you know, obviously very good. Then you can move this higher. I mean, yeah, I could do something like this. See if we get filled in these trades. So yeah, that would have filled us both long and short at the same time. We're going to put it in our little Excel sheet as well, saying that we are hedged. So we're filled at 10, what is this, 10.33. 10.33. Gonna do this one here. Hedged. 10.33. Got a long position. Got a short position. Oops, didn't mean to do that. We are averaged at 190.30 for both trades. Our short proposed exit is 186.10. And our long proposed exit is 194.65. We are risking 0.15R on each trade. So yeah, let's just see how this goes. Pretend we're in both, okay? Obviously, our long position will be stopped out here. So we're stopped out of the long position at 188.33. 188.13, sorry. We took a loss of $75. $75 down the drain. And we're still in our short position, so we're hoping that our stop loss gets hit. Right? Stop loss gets hit. I mean, we're hoping that our target gets hit. Obviously, you know, we want to see some more follow through. You know, 1R in this trade is going to be here, so we do not want to see the price go back above this level. So I would probably automatically put my stop loss at the at 1R, so I know that, you know, any profit we make exceeding this stop loss level is actually green profit. So yeah, we're still looking for places where we can exit the trade. Alright, stop loss has been hit, so we would have made nothing. We would have gained 75 and lost 75, and likely would have paid out position commissions. So making this trade obviously insufficient, but that is generally how I hedge trades. Sometimes it works very well, like we do see lower, but you know, as my back trading sessions continues, and you know, I'll obviously hedge more trades inside of them. It's very rare I do hedge trades, because I usually do have strong conviction on which side I do play. But yeah, in this scenario, obviously stopped out on both. Could be a lot worse, so do not mind at all. Yeah, we're just gonna skip along this bit here. I'm not really too fast in trading. on this Friday, as it is quite choppy. So yeah, that's basically it. Obviously, a few setups I could have taken, but none really that good. For instance, could have went long here, stop loss lower day. Target, you know, up here, that would have been a perfect trade. A really, really nice trade. Solid 1.2 trade right now. But is what it is. Sometimes on Fridays, I just hate trading it because it is so much chop. But yeah, that is it for the back trading session. Let's just bring over my Excel sheet. Just to show you guys, you know, my setup. So Monday to Tuesday, this is basically what I do every weekend, trading Tesla. Yeah. So as you can see, I would have taken 1, 2, 3, 4, 5, 6, 7 long positions, 1 short position. I would have gained on, so that's 1, 2, 3, 6 of them. Lost on 2. P&L for the week is 590. That is dollars. $590, and our R's for the week is 8.63. So obviously, a very good week, a very profitable week. You know, it does kind of give me a indication for me to start sizing up, because, I mean, don't get me wrong, I'm not going to start using 1% risk on my account, but if we do start risking 1% on my account, that 1% is going to equate to, so let's just do the calculations here quickly. So 1% is going to mean 8.65 times. Fuck, what the fuck am I doing now? My mind has gone blank. How has it just gone blank? Risking. It's actually fully gone blank. Let's put this. That's the wrong thing, isn't it? Why is this not? Oh, hang on, equal sign. My bad. 1 times. Is that right? Yeah, that's right. So if I was risking 1% of my account, oh no, that's not right. Hang on, guys. I'm really sorry about this. Bit behind. I don't need to go divide by 0.5. No, that's not it either. That's just times it for some reason. Why is that times it? Why is that doing that? Alright, actually, don't worry.